I'm going to teach you a highly profitable Forex strategy in 5 easy steps.
TradeRoomPlus.com.
How many times have you taken a breakout trade where the market enters a new range on the Forex markets only to have it come back into the previous range and put you in a losing position? These false breakouts, or so-called fake outs, happen all the time on the FX markets. This is what I'm talking about. The market enters a new trading range, it tricks you to get long, and then it enters the previous trading range, becoming a false breakout or a fake out. And my job today is to show you how to take advantage of these fake outs so you can make some great profits from those moves. And of course, as always, I'm going to be showing you a live trade example that we took recently in our trade room to demonstrate how to trade this strategy properly. Step 1. Identify support and resistance. Now, support and resistance levels should be very, very obvious. The exercise I always bang on about is take a blank chart and mark up the support and resistance levels. Here is a cable, the pound-dollar Forex pair, with support and resistance marked up on a daily time frame. Now, for purposes of our trade, the level we're interested in was the low of 2019. So we have that marked up, and that's a level of interest for us when the price action comes to it. Step 2, wait for a break of a level. We cannot have a false breakout until the market breaks above a resistance level or below a support level. Looking down on the hourly time frame on our cable example, our pound-dollar example, we can see the previous 2019 low marked up by this blue horizontal line. Now the price action comes down to it and it starts to break below it. It starts to give us a false breakout. Now another rule we need to implement is we want the market to move beyond the level by at least 20 or 30 pips. It depends on the currency pair, it depends on the volatility, but at the moment we want the level breached by 20 or 30 pips. And as we can see with the 7 a.m. candle on the 17th, that met this criteria by going beyond the level at least 20 pips. However, whilst the market is below this level, we do not take a trade. For the purposes of this trade, whilst the market is below the support level, we do not take a trade, because if the market does go on to break out, we don't want to be on board of a losing trade. If it does go on to break out without us, then so be it, we accept it. We're looking to fade this trade, we're looking to trade back in the range. If the market doesn't set up that criteria, we do not take a trade. Step 4. Placing an entry. So once we're starting to see this trade set up, how do we actually structure our orders around it? It's very, very easy to look at trades, look at the markets and say, well, this may happen, that may happen, but actually wrapping around a plan and executing that plan correctly and sticking to the plan, which often is the downfall of traders not sticking to the plan, is a lot more difficult. So here we wanted our entry obviously back in the previous range, so above the previous support level of 2019. Because it's a fake out, we need to be having our entry back in the previous range. So we placed our entry here with this orange line at 1.2424. That was just above some of this overnight noise. So if the price action came back into the previous range, started to fake out, then we were going to get long from this point here. If you like what you're seeing and you want to have some more no-nonsense trading advice, including profitable strategies and everything else that makes profitable traders, then please click subscribe just below my finger here. Step 4, placing our stop loss. Now, the great thing about this trading strategy is it gives you a very, very clear place to put your stop loss, to put your invalidation. Some people don't trade without stop losses. Some people will tell you not to place stop losses. Don't listen to them. Without stop losses, you can't effectively position size. Okay, some professionals may be able to do soft stops where they take manual losses and have other complex strategies, but you as a retail trader should always use a stop loss. I always use a stop loss, and it's created success for me. Now, we can see here we have our low from this hourly 7 a.m. candle that we looked at earlier, so we're going to place our stop just below that low. If the market does intend to break out and does make a new low, then we don't want to be on board with the trade anymore. And what you'll often find with these trades is you can have quite tight stop losses, sort of a 30-40 pip stop on occasion. So if you do get a nice swing, a nice fake out, then you can have a really strong risk reward strategy. And if you think about how many of these you could potentially take a year, particularly on a daily time frame, you will get on board of some monsters that will give you a fantastic risk reward. So remember, always place your stop just below the low or just above the high of the fake out, depending on whether you're going to be trading short or long. Step 5, taking profit. Now, what you'll often find with these trades is there is a swing high to a swing low or vice versa. And that means when you have an obvious swing high to swing low, you can pull a Fibonacci retracement. That is the most obvious way to use a fib, and it's the way that we use them time and time again. Nice, obvious swing levels. Pull the 100% down to the 0%, and then you'll see your respective retracements. Now, For the purposes of this trade, we will always take 50% profit at the 50% Fibonacci retracement. Now that means we don't close our entire position, because if we leave 50% of our trade running, that gives us an opportunity to get on board of a large swing trade. That's the best way in our view to get on board with swing trades, is to take 50% at the 50% fib and then leave the remainder running in case the move does become a really big one. Step 1, identify support and resistance. Step 2, wait for the break of the level. Step 3, place your entry. Step 4, place your stop loss. Step 5, take profit. 5 simple steps to a highly effective strategy. Now here's another video for you.